Welcome to High Net Worth Living. Today, we're diving into a fascinating subject in the world of high net worth living, investing in art and collectibles. For ultra-wealthy individuals, art, rare artifacts, and unique collectibles aren't just passions. They're smart financial moves that can yield substantial returns. In this video, we'll uncover how art and collectibles fit into high net worth portfolios, why the wealthy invest in them, and what strategies can maximize their returns. Be sure to stick around until the end, as we'll also go over common mistakes to avoid in this exclusive market. Ready to explore the world of luxury investments? Let's jump right in. Why the ultra-wealthy invest in art and collectibles? Art and collectibles are far more than beautiful pieces and rare artifacts. For the ultra-wealthy, they represent tangible assets that offer unique financial advantages. But why do these assets attract investors with significant wealth? 1. Diversification. For high net worth individuals, art and collectibles serve as an alternative asset class that diversifies their portfolios beyond stocks, bonds, and real estate. 1. Tangible assets like art often retain or even increase in value during economic downturns, providing a form of insurance when other investments might be underperforming. 2. Cultural and emotional value. Art holds cultural significance that resonates deeply with collectors. 2. It can offer a sense of personal fulfillment and prestige, and it's a way to leave a legacy. 3. Tax benefits. Many countries offer tax incentives for art investors. 3. The ultra-wealthy often leverage these, such as donating art to museums or establishing private foundations, which can yield substantial tax deductions. 4. Long-term appreciation. Historically, certain collectibles like fine art, vintage wines, and rare coins have shown substantial appreciation over time. 4. Blue-chip art, which includes works by iconic artists like Picasso, Monet, and Basquiat, has seen consistent growth, making it a stable and rewarding investment over the long term. Understanding art as an asset class has gained recognition as a legitimate asset class, particularly over the last few decades. When treated as part of a portfolio, it can contribute to wealth preservation and long-term growth. 1. Blue-chip art. As mentioned, blue-chip art includes works by established artists whose pieces have historically appreciated in value. Examples include Warhol, Van Gogh, and Monet. 1. The market for blue-chip art has matured and typically shows steady growth, making it a safer bet for ultra-wealthy investors. 2. Emerging artists. Investing in emerging artists can be more speculative but offers the chance of high returns. 2. Finding the next big artist is a gamble, but if successful, the payoff can be tremendous. 2. Many ultra-wealthy collectors hire art consultants to help identify up-and-coming talent. 3. Art funds. For those who prefer a more hands-off approach, art funds pool investors' capital to invest in a diversified collection. 3. Managed by experts. These funds reduce the risk of direct investment while still offering access to potential gains in the art market. The world of collectibles. Moving beyond art, collectibles offer a world of investment opportunities with unique advantages and risks. 1. Fine wines. Wines from prestigious vineyards like Chateau Margaux or Domaine de la Romanée-Conti are considered liquid assets with significant value. 1. Aged wines have historical appeal and rarity that make them highly sought after, with some vintages appreciating rapidly in value. 2. Rare cars. For car enthusiasts, rare or classic cars are prized investments. 2. Vintage cars from brands like Ferrari, Porsche, and Bugatti tend to increase in value over time, particularly limited edition or well-preserved models. 3. Watches and jewelry. Luxury watches and jewelry from brands like Rolex, Patek Philippe, and Cartier are more than adornments. They're symbols of prestige that hold or increase in value. 4. Coins and stamps. These markets are niche but incredibly resilient, with a stable collector base. 4. The market for rare coins and stamps has seen consistent interest from investors seeking assets that hold their value long-term. Investment strategies. How can ultra-wealthy individuals approach art and collectibles strategically? Here are several methods used to maximize returns. 1. Buy and hold. Many high-net-worth individuals take a buy-and-hold approach, acquiring pieces they believe will appreciate over a long period. 1. Art and collectibles aren't typically flipped, but held for years, often across generations, with the goal of maximizing long-term gains. 2. Limited editions and provenance. Provenance, or an item's history of ownership, can significantly impact value. 2. Limited edition pieces and items with storied pasts are more likely to appreciate. 3. Working with advisors and curators. Art consultants and curators play a crucial role in advising ultra-wealthy investors on acquisitions. 3. These professionals can provide insight into trends, help verify authenticity, and assess potential appreciation. 4. Consider auction houses. Auction houses like Sotheby's and Christie's are major platforms for acquiring and selling valuable pieces. 4. Many investors prefer purchasing through these houses as they handle verification and tend to attract serious collectors, ensuring that pieces are authentic and competitively priced. Risks and challenges. Investing in art and collectibles, while lucrative, carries certain risks. 1. Market volatility. While blue-chip art is relatively stable, the broader art market can be volatile, especially for newer or speculative pieces. 1. Emerging artists, for instance, may not retain value if trends shift. 2. Storage and maintenance costs. Unlike stocks, art and collectibles require storage, security, and in some cases, maintenance. 2. Fine wines, for example, need climate-controlled storage, and vintage cars require regular maintenance, which can add to the cost of investment. 3. Liquidity. Art and collectibles are less liquid than stocks and bonds. 3. Selling a painting or a rare car might take time, and investors must wait for the right market conditions to ensure a profitable sale. Practical tips for new investors. Finally, here are a few practical tips for those new to the world of art and collectible investments. 1. Start small and diversify. Starting with smaller, less expensive pieces can give new investors a feel for the market without risking large amounts of capital. 1. Diversifying across different types of collectibles can also spread risk. 2. Do extensive research. This market requires in-depth research. 2. Make use of resources like art databases, auction catalogs, and industry publications to stay updated on trends and values. 3. Work with reputable sellers and advisors. Given the risks of forgeries and overvaluation, working with reputable sellers or dealers, especially for high-value pieces, is essential. 4. Consider fractional ownership. For those not ready to invest large sums, fractional ownership allows you to purchase shares of high-value pieces, giving you a stake without full ownership. 4. This option is growing in popularity and can offer an affordable entry point. Art and collectibles offer a fascinating, dynamic, and rewarding path for high-net-worth individuals to grow their wealth. While there are risks, the combination of personal enjoyment, cultural significance, and potential financial returns makes these assets incredibly attractive. For those considering art and collectibles, remember that success often lies in patience, research, and a genuine appreciation for the asset. Thanks for joining us today. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more insights into high net worth investing. Let us know in the comments if you'd like to explore any specific aspect of art and collectible investments. Until next time.